Hey everyone, it's been a while, but we're back. Quarter two, and guess what? We have all sorts of news that has been coming up. Today, let's talk about the crash and the demise of the commercial real estate market that we've all been hearing about. And yes, it is very turbulent times for most investors. But let's talk about what's going on. So you have articles from MSNBC to Yahoo Finance to analysts from Morgan Stanley to Chase to Bank of America saying the real estate market is going to crash. Commercial real estate is worse than it was in 2008. So let's just talk about that for a second. History of commercial real estate, how it works is commercial real estate has resets on debt. So your mortgages are not locked in for 30 years like they are in residential real estate. They're locked in for 3, 5, 7, 10 years. And they're on a 25 to 30-year amortization schedule, but you still need to get new debt every point of that market. And if you buy an asset that's up here, betting on appreciation in the market, higher rents, higher fees, higher occupancy, then your bank obviously appraises you right here. But then at the next time, if the interest rate goes up and occupancy goes down, your property is worth here, your debt is here, and if you want to refinance, you have to fill that gap with cash because your property isn't worth what it used to be worth anymore because you've refinanced it so many times and pulled out so much capital out of that deal or purchased it recently, and now the market has changed, occupancy rates have changed, price per square foot has changed, all sorts of things, and now you're in trouble, which a lot of big investors are. But today I want to talk about the small investor. Everyone's talking about these big, huge towers in every single downtown area that are getting given back to the bank because they're worth 50% less than what the debt on them is. Not what the purchase price was, but what the debt is on these properties still, which is usually 20 to 30% less than what the debt amount is. So yes, big box, it's going to be very hard for big box because not a lot of people need that much space anymore. The big boom during COVID was warehouse space. Amazon, Facebook, all these places, drop shipping, e-commerce, they wanted space and space and space because they thought people were just going to keep buying and buying and buying and buying and buying. So warehouse blew up. Office has been around for a very long time, but now not a lot of people need 100,000, 200,000, 50,000 square feet to operate a company. We saw this with Elon Musk after he took over Twitter. He downsized, I think, by 3/4 of Twitter's employee base. And guess what? Twitter's still online, doing a lot better than it was before, and a lot more profitable because all the money that they're saving not only on employees, but office space. Which brings me to the next thing is when you're reading the news, yes, certain segments of real estate always crash, always burn. Certain investors always crash, always burn, no matter what the market's doing, because it's a very hard business. As we saw during the peak of the real estate market in residential, AI firms with AI-based software like Opendoor, Zillow offers, and all sorts of these startup companies that had billions of dollars in backing that were walking around using AI software to buy homes in certain neighborhoods and then putting paint on them and reselling them, which caused a huge spike in pricing because they were creating the price spikes on their own for the next deal and the next deal and the next deal. Well, if you take that into commercial real estate, AI can only do so much because those guys got burnt in a great market, but now the market has changed. And the biggest change in our market today is debt. Everything runs on debt in real estate, large amounts of debt. And when your interest rate goes from 2, 3, 4% to 8, 9, 10%, that creates a big gap in your interest payment and your profit margin and your cash on hand every single month. On top of that, occupancy rates go down, price per square foot goes down, and guess what? You don't have any cash. You pulled out all of the equity from a previous time out of your properties. And now your only choice is to go bankrupt and give that property back to the bank because you have no way of coming out of it. But if you were a smart investor, if you took the real estate long-term game as it is, and you weren't a huge REIT with $1 billion of investment money every month coming in and out, you weren't somebody that was trying to go huge and hit home runs every single time. You were just a slow, steady investor, which a lot of my clients are, that try not to leverage their properties all the way, that hold for 10, 15, 20 years, that are take a big space that's distressed and make it into smaller spaces for entrepreneurs, for smaller businesses, for the market today. You're not going to go bankrupt because A, your property's not leveraged as high as these big guys are. B, all you need to do essentially is make a little bit of money to pay that debt on that property and those expenses, and you're okay. You don't have 1,000 investors looking for 8 to 12 to 18% returns. You have either your own money, family money, outside investors that are, okay with taking a smaller amount, but they know that, hey, we're in this long term because the market has changed now, and all we're going to do now is we're going to save this property, do whatever we have to do, because the market will change, prices will come back, vacancy rates will go back down, and everything will be okay. So that's the difference between all the crash bros out there that are saying everything's going to crash and burn and do whatever. And guess what? It might, because we don't know what's going to happen. We don't know what the Fed's going to do. We don't know what the economy's going to do. We don't know what the next black swan event is going to be that could crash and burn everything. But as we know right now, the reason why all these buildings are going bankrupt and all these companies that have been around for hundreds of years that are trillion-dollar companies almost are letting buildings go is because they're worth 40, 50% less than what they owe on them, which means they lose all of their investors' down payment, they lose all their investors' money, and they lose their own profit margins, and they give it back to the bank. So somebody else is going to have to buy it and figure out what to do with it. But it's very hard the way that office buildings are built to transform them into anything else because of the way that they're set up. You have windows on the outside and a lot of space in the middle. So it's hard to make them apartments, hard to make them hotels because they're just not built for that. So who knows? I think the biggest thing that people can do with these big office buildings is split up the spaces, smaller units, make it more smaller business, smaller entrepreneur friendly, and you'll be fine. And lower your rates because the rates of yesterday on office and warehouse and everything else, unless you're in crazy busy markets where there's not a lot of inventory available, is not the price today. So just know that moving forward, it's going to get a little sticky. It might get a little tough for a lot of you. If you have any questions regarding commercial real estate, remember we play Minnesota, Southeast Florida, from Miami all the way up to Boca Raton. And we've been doing this for 11 years and we've made a lot of investors a lot of money because we use creative strategies and we out of the box thinking on how to get deals done, because a lot of people do not have that creativity, and we're lucky enough to be associated with great people, great mentors over the years that have been able to put us into these great creative opportunities that people are doing all over the place. So if you have any questions, please reach out. We'd love to help. We have some big, humongous news coming on the real estate front in the next couple of months. Super excited about. And please, if you're here, please follow us. I'd love to follow. Reach out to me, DM me on Instagram, Facebook, leave a comment here. I'd love to provide as much value as I can to you. And we are going to get a lot more consistent with these videos because we've just been swamped. So I apologize for not being here. But just know, when somebody says the crash is here, somebody else out there is making a lot of money and changing a lot of lives on the other side of that crash. And not everybody is involved in that crash because there's a smart way to play this long-term, slow and steady, or fast and abrupt, and it's the same way. The other way, the downfall is fast and abrupt as well. Have an amazing day. Q2 2023. I think we're going to see some great things happen. So reach out. Any investment questions if you're looking to invest, if you're looking for certain properties, if you want to long-term hold, if you want to talk about strategy, tax savings, let me know. Reach out. Thanks so much.